Hey, good afternoon. Trader Tim here from eMini Mind. Just wanted to run through a recap of the week here. It's the 28th, Thursday, the 28th of January, and been a kind of a wild week with the GameStop and AMC and some of these other stocks going gangbusters and short squeeze. I was not participant in those, so if you were, hopefully you were able to take some profits and you're not locked out of your trades. So if you are, I'm sorry to hear that. um, the ES, not the most exciting this week as far as lots of trade setups go, but I did have, as we talked about in Tuesday's trading session, at the close, I put on what I intended to be a hedge into the Fed meeting announcement sort of for Thursday. It ended up gapping down yesterday, and then I just took the position off at the close. So I used the 382s in the SPY 382 puts, and I put those on at the close on Tuesday. And I was a little bit surprised to see such a gap down ahead of the Fed meeting announcement. But I typically, for the most part, stick to managing any option positions at the close. So I try to put them on and take them off at the close. And so I just rode it through the day and then took it off at the close. An interesting thing about yesterday and today, look at the breadth. 1 to 1, and it was 1 to 1 yesterday, and it was 1 to 1 or 1.2 plus or minus pretty much all day yesterday and today. The advanced decline line yesterday for a while was a little more uh, polarized in the minus 2,000 region, but when you don't have volume going into stocks that are moving down, it's just not a sustainable move. So not really a surprise to see us take back everything that we, or most of so far, what we gave up yesterday. And you can see on this channel that I have drawn the SPY, we came right to the bottom of the channel and then jumped. So initially, my plan was to wait for a break below the swing low here on the 15th and then look for a short setup. But because the selling was so weak and there's nothing backing it up, there was no follow through. I mean, today we gapped up at the open and just moved up from there. So I didn't end up putting on a short position just because all signs are still pointing to the upside. I know there's a little bit of a scare with some of the hedge funds surrounding all of these short squeeze positions, but they're gonna be just fine. So I'm not too worried. I don't have anything against hedge funds, but the short-term bearishness, at least as of today, I'm just not seeing the fundamentals with the market internals showing overly bearish. So if we can come down and take out yesterday's low and not just put in a hammer at the underside of the trend line, but actually get some continued selling into the close that takes us down below this uptrend line, then yeah, I'll revisit putting on a short. But in the meantime, I'm just gonna um, keep riding the up wave here. VIX yesterday jumped and then has since took us back down into the upper 20s, so nothing too crazy there. I did want to. Well, let's jump into the ES, run through some trades, and then we'll kind of wrap up with some other bigger picture stuff. If we go back to Tuesday, so I didn't have any trades on Monday. I was kind of coming off a busy weekend and just was trying to use it to get my groove. Came into the week saying, okay, I'm going to pass on all shorts because every bit of news the market has just been shaking it off and it's been going higher. So I did pass on a couple short trades that maybe would have got a first target, but that's about it um, on Monday. So Tuesday, we started off the day, and um, I like to start my drawings using the anchor points of the day. So like the high and the low for the day are very typically adhered to. Those points starting from the trading hours only are good places to just, if you're going to open your chart and start the day, use the highs and lows for the morning as your anchor points. Another place I like to look at is the prior afternoon's swing highs and swing lows. So on Tuesday, I came down here to the swing low, just before the close, and then drew up a long setup like this. And so I came in now on the 512 tick chart, and we had a nice little double bottom here. I drew up a long like this. Great little setup, just didn't end up working out. So that one was a stop out for my first setup on Tuesday. But then shortly after, it was 21s over here. We ended up getting another little long setup, and this guy lined up right with this bigger halfway back. So the key here is I'm trading in the same direction of the larger time frame. And as beautiful as this little double bottom setup is, broke the swing high, when we're basically just playing a statistical odds game here, not every setup's going to work out. So rather than saying, well, it has to go up, I'm going to get rid of my stop, I'm going to double down as it's going against me, just get out and then reassess, come back and place another trade. So ended up getting in long again, just a little bit lower down here at 45.50, and that one got a little bit of a pop. Was able to ride it up. How did we do this one here? So I drew up the next retracement, meaning I have the first 50% retracement drawn up like this, and once we hit the negative 23% target up here, then I'll draw up the next retracement and use that 61.8 as my stop placement under here. And so I can start bringing the stop up. Then if we end up going really up, if we go up really quickly, you can come in and look for some kind of a swing low, which we had one candle here that I tightened my stop to. You could use that as a swing low to draw up the next retracement, and I did come in and tighten my stop a little bit and was taken out right here at 49.25 is where I got taken out up here. And so it did go a little bit higher and then rolled back over. So those were the two that I had on Tuesday. Nothing on Wednesday. I kind of typically don't trade on the Fed meeting days. Tuesday at the close, put on the SPYs, the 382s, and then so Wednesday all I really did was sell them at the close, cover them at the close, and then today tried for a couple of long setups here this morning. So again, starting with the anchor point that today happened to be the low of the morning to the high. If we had moved down, this low from yesterday would have come into play, but not really applicable today just because we moved up right from the open. And so coming in here, well, there's a couple things about this morning. I like this little bull flag on the 5-minute where you have a nice big up move and then 3 bars sideways and then a breakout. So if we fast forward to this morning, 28th, right at the open, here is that same first long setup. And so I tried a long actually earlier here, and I did not get a fill. It came down to 81s. That was where my order was, and didn't get filled there. Then we kind of were messy for about 10 minutes or so, and then retested the 50%. So that's this guy here. I tried, I drew up a long setup like that, and market just jumped pretty quickly and never really pulled back. So this line up here is the 30-minute high. And so if we draw up the next retracement, you can see how this 50% we came right to the negative 23. This 50% was a little bit big to just put a blind limit order right at the 50. If we draw the next one up, we can see we came pretty close to it but didn't tag it. I drew up, since this high didn't really break the prior swing high, I drew up like this to kind of correspond the 50% with the top of the first 30-minute range. Looked like a great setup, but we just weren't really able to get a pullback. And so from there, you have a couple of options. You can just take the next retracement using whatever pullback you got. So in this case, we only dipped here. And so you can use that as your swing low to swing high. In this case, that was really the only option to get into a long at that point. Buying a breakout above highs is something I will do occasionally. I didn't feel like today was a strong enough day because the breadth was at 1-to-1. So anytime I see a breadth ratio at 1-to-1, I'm thinking wherever we were before, so like the day before, we should be able to return to. And so today was balance, 1-to-1, meaning the same amount of volume is going to stocks going up versus down. There's not really a polarized super bullishness or super bearishness. So before we had these 2 days of 1-to-1, we were trading up here. And so a reversion to the mean, if you will, is kind of what I'm expecting. So we'll see if over the next couple days we can't trade up to fill that gap up here. It's a 38.51. So nevertheless, I was fine with longs today. Just wasn't able to get any fills. And so by the time then the next long setup, and this is why I don't like to just take a limit order on a bigger retracement, because by the time you get up, what are we at, 825? By the time you get up to these higher, like if you just put if you just put an order right at the 50% without seeing any support there, and it blows through your order, you're just sort of wasting money, wasting your stop loss. I'd rather see a support level established and then be able to jump in. So it's been a pretty somewhat uneventful week. Had a nice, the short Wednesday into Thursday or Tuesday into Wednesday was pretty nice, but not a whole lot on the intraday time frame. I typically don't get overly involved with some of the hype stocks and hype things like the GME. So if you're playing those games, just be super careful not to get caught up in a situation where your broker locks you out and you're basically your hands are tied and you end up taking a bath on what at one point was a pretty nice trade. So that's all I got for you this week. If you have questions, drop them in the comments below, and I hope everyone has a great weekend. Thanks. We'll talk to you soon.